So the situation in Australia is that emissions have been rising at a quite alarming rate. The latest greenhouse gas inventory showed that they were 182% higher than 1990 levels. However, the majority of this was due to non-anthropogenic emissions from land use induced from recent droughts and wildfires. So despite these aggregate figures, Australia remains on target to reach its Kyoto goal of 108% of 1990 emissions, which includes only anthropogenic induced emissions. I'll just move slides here. So the following two slides outline the basic elements of emissions trading in Australia. They've had a mandatory scheme in New South Wales, which was using emissions intensity rules, which has had arguable success at establishing institutions to account for greenhouse gases, but less success at environmental effectiveness at actually curbing emissions. The national scheme, which is set to start on the 1st of July 2011, is probably going to be one of the world's most comprehensive if it makes it through the political obstacle course, I guess, of compromises that will need to be made. Australia's possibly the world's largest coal exporter, and already the fossil fuel sector has secured 3.9 billion worth of concessions as a direct result of the EU ETS, which will keep it as a significant player. So moving on to New Zealand, which only has a fraction of the world emissions and is an economy already dominated by renewables, with 66% of energy in the electricity sector coming from hydro and other renewables. It really is a tiny contributor to the climate crisis. It's already implemented a national emissions trading scheme with forestry operators, and has started trading in New Zealand. The situation in Japan is quite exciting. It's being the world's most energy efficient economy is a double-edged sword, because on the one hand they're at the cutting edge of new technology, but on the emissions reductions are quite hard to come by. They've implemented already a voluntary action plan under the Kibaran, which is their industry lobby group, if you like, or organization that coordinates industry in Japan, and that covers 44% of total emissions, and has as its goal to reduce emissions in the fiscal year of 2010 to below 1990 levels. This, they have said in a self-assessment, has been successful, but aggregate Japanese emissions continue to rise. Other initiatives, initiatives include the Japanese Voluntary Emissions Trading Scheme, or JVETS, and a cap and trade scheme, which is being implemented in Tokyo, which will be a mandatory scheme modelled on the EU ETS, which, due to the size of Tokyo, will cover about 5% of total emissions. With an election coming up at the end of this month and climate change a key point of differentiation between the two main parties, Japan, as the world's third largest economy and a bridge between Western economies and Asian economies, it will be a key thing to watch developments there. Finally, I'll just touch on reduced emissions from deforestation and degradation. If global emissions targets are to be met, it will be necessary to address emissions from this source in countries such as Brazil, Indonesia, and the Congo. Today, these emissions are being left out of international agreements for fear that they will flood the market with cheap carbon credits. This is a misguided fear. While legitimate challenges exist in terms of governance and legal tenure of land in remote areas in some of these countries, including deforestation will allow for the more ambitious targets which have been set by some nations, closer to 30% reductions on 1990 emissions to be met by developed countries. This, I have to say, is probably one of the most important issues that must be addressed in Copenhagen. And